Hi, this is a financial biopsy of the Irish banking crisis. Now, my name is Joseph Sheehan. I'm a doctor. I live in Chicago. The uniqueness about this is that I have one single loan among many loans, but my loan is very unique because it covers the entire period of the banking crisis from beginning to end, essentially. And number two, it's in a different jurisdiction. It's in the United States and Ireland. Because of the double jurisdiction, a lot of information became available that would not normally be available. And plus the fact is, we've outlasted the crisis to a certain extent. Now, I want to start by showing you what the facility agreement of a normal bank. And this is the facility agreement that I signed in Chicago, 2006. You'll see the logo of the Anglo Bank here, and then the facility agreement essentially has two parts. One is the loan of the amount of money that you're taking out, and number two, the very much more important part, is the securities. The securities normally are 50% above the value of a loan, if not more. In this condition, it was 6 times the securities of the value of the loan. So that's important. Now that we'll keep coming back to that many times. Now let me put away the loan for a moment, but I tell you basically what has happened over the course of the years. Now, 2002 is when this loan came out. 2006. That loan was taken out, and it's for the following 13 years, brings you up to date, 2019, that loan is still in existence. 2008, important year to us, because that is 2008, that was the year of the financial crisis, triggered, they say, by Lehman Brothers investment banking out of United States failure, and in London. 2005, after 2005, they never had an Irish office, but that seems to be irrelevant to why the banks failed. We don't know. Price of property fell. Between 2008 and 2012, that's an important year, 2012. During that period, we have a lot of banking activity, a lot of banking noise, white noise, saying, are the banks solvent? Are they in distress situation, etc. That gave the opportunity for the central bank to come in and say, oh, we need to support you. So in other words, they took, and over here is my loan sitting in the Anglo Bank, okay? Now, by that time, by the year 2012, it was called the IBRC, which was a combination of the Anglo Bank and the Irish Nationwide. Okay, bank. Now, in that bank, there was about 55 billion euros of assets. Okay? Now, by the year 2012, the securities have been required to be sent over to the central bank. And in return, so all the securities, so all the, what we would call assets or the securities, were sent from the bank over to the Central Bank of Ireland. Central Bank of Ireland, a division of the European Central Bank. Okay, so now we have the situation by the year 2012 that this happened. Now, are we sure that happened? Yes. Public domain information, Central Bank tightens its grip of the IBRC asset. This is Irish Independent. From October the 23rd, 2012, Tuesday, it shows that it declares that all the assets had been sent over to the central bank. In return, later, we will see that the 5 billion was loaned from the central bank over to the IBRC. Now, that's important, about 5 billion. In other words, they were not bankrupt by that stage. So in other words, 2012. Now we move on. 2013 comes, February 2013. The government withdraws the 5 billion. Subsequently, Anglo IBRC is now in liquidation. Special liquidator was appointed, called Kieran Wallace, and he steps in. And what's his role? He is to take the loan books, which are the only things that are left here, and liquidate them. Sell them down, make money. So in other words, the loans are here, and they're loans only. Very important, because the securities are over here. This is the first time in history that this has ever happened. Never happened in banking before, in Ireland or England or any other period that we know of. We say, well, are you sure that happened? Because this is important. Now, the International Monetary Fund out of Washington reported in the year 2013, that is just about the same time, instead of February, it was in April. They have a report saying that that is a fact. Now, later on, we will confirm that in court appearance in Delaware, where Mr. Kieran Wallace testified that that is a fact. Now, what happened? All these loans were eventually sold to, in the course of time, to vulture funds. Okay? Now, by the end of the year 2014, nearly all the loans were sold. My loan, which we're dealing with, mine is the particular loan because I have the information and it all relates to that. And my loan is only one of many thousands, but it's important that we biopsy that one. Now, my loan got sold to a smaller vulture fund because it's a small loan, and it was sold to a Liechtenstein corporate foundation. Now, when was it sold? It was sold about a month before Kieran Wallace testified in Delaware. Now, why did he testify in Delaware? Because when IBRC went into liquidation, he had to liquidate the American divisions. And as you know, I signed my loan in Chicago, and that gave me somewhat, it had to be presented to the Delaware bankruptcy court, where Kieran Wallace was applying for bankruptcy of the American divisions. The American divisions of the Anglo Bank had 1.2 billion of assets of cash in their system that they want to bring back to Ireland. Subsequently, he testified, give me bankruptcy, period, so I can bring my money back to Ireland. The judge, Christopher Stanchi, declared in his judgment, he said, yes, by Kieran Wallace's documentation, etc., that the Anglo Bank was indeed in bankruptcy because all the assets had been sent over and all the securities had been sent to the central bank by the fall of 2012. So it was clear to the judge in Delaware by this date that Anglo Bank had no money. So he allowed the transfer of the American assets back to Ireland. But that was testified about a month after my loan was sold. So he had to go, and Kieran Wallace had to get approval of my loan to be sold from the Delaware judge. And so he gave permission, and during the testimony, this is the transcript of his testimony, where he says, there was concern previously by me that when I tried to buy my loans back here, I went in with money, same amount of money plus interest, to buy my loans, because I thought when I bought my loan that I would get back my securities. But apparently no, I wouldn't, because he testified, no. In actual fact, there was confusion as to what was being actually selling. We were just selling loans. So in other words, he testified to the judge that the sale of my loan, was only a loan, there was no securities attached to it. Now that's kind of clear. Two situations. The securities are over here, the loans are over here. Now the loans were trading about 20% the value of the book value of the loans. Generally, we don't know, because that's undisclosed information. So, in other words, why were they only 20%? Because they contain no assets. But they did contain a loan, which needed to be paid up over many years. So in other words, their value was only about maybe 20% of the value. That's no dispute. There is no dispute. So we have 3 documented proofs that this is what happened. Now, unfortunately, in Ireland, there's a different situation. When it comes to America, the US courts here clearly indicate and clearly know that there is no securities attached. Now, when it comes to the Irish court, there's a blind eye to the bunch of funds. They're demanding ownership of the securities, or they have the right to call in these things. They don't. To perfect their securities, they can't, because they don't have any securities. So they only have a loan. So there's a lie going on. Either the US court has been lied to, or the Irish court has been lied to, because there is no assets here. They can call in a loan, but they can't, or you can repay a loan slowly over time, but you can't call in you cannot call in the security. Now, what happened to security? We have documented proof that these were sold to NAMA. Now, NAMA is a privately owned institution which now owns which went on and sold. They sold the Central Bank of Ireland, sold it to NAMA, and they've sold them on. Now, in other words, there's 2 sales, 2 separate sales. They can't be selling the same thing. Now, there is a very important Roman law, which I think it's worth remembering, and it is nemo, N-E-M, nemo dat quad non habet. It's just not to waste your time, but you can't sell or give what you do not have. So in other words, here, the liquidator, here was, could not sell the securities which he didn't have. They're just not there. So in other words, that's a very basic law for 2,500 years in Roman law. Now, what's our diagnosis of this situation? The diagnosis is basically fraud. Why? Because the bank, where are the banks? Banks are up here. They're still in existence. They're not suffering. They've got rid of a lot of problem loans, maybe. They may be a little skinnier, but they're very healthy. What is even the IBRC still in existence after these many years, still giving out loans. And what here, so the banks are okay. What about the borrowers? They've lost everything. They have lost their securities, went over to the central bank. They've been sold on to somebody else. So what has really happened? Why do I say that it's fraud? Because there was a deception. We were here talking about bank having problems, but it wasn't the bank having problems at all. It was the borrowers were having problems because their securities were being taken, and they were not being told about it. There was deception. So theft by deception is the very definition of fraud. That's my take, and it's proved, and there's no dispute about the evidence. So my loan is only one on many thousand loans. So I think that, but we have the proof that is indisputable.